Good day. My name is Bob Sproul, and I am a retired faculty member from the School of Accounting and Finance here at the University of Waterloo. And I also help the Graduate Student Association with accounting in my retirement years. This video today is in replacement of the scheduled seminar that we were going to run 2 weeks ago, but we had to cancel because of the COVID-19 situation. The purpose of this video is to basically introduce you to income tax in Canada, cover some of the basic context in which income tax works in this country, talk about things to be considered in the context of income tax, identify a program that can be used for the completion of tax returns, and through covering all of this material, obviously focus it in on you and your profile as a taxpayer in Canada. And so there is a PowerPoint file that has been prepared that I'm going to use as a basis for the discussion today. You may wish to have accessed that PowerPoint file and printed it out. You can make notes then based on what I share with you today, and refer to it after today's presentation to help you prepare your 2019 tax return. So I will identify as I go through the commentary what slide I'm on. You'll see that there's a progression in terms of what I talk about related to the sequence of bullets on each slide. I will pause periodically for you to catch your breath, regain your sanity from listening to this scintillating topic, and hopefully by the time we get it over, you're going to get over with this presentation, you're going to feel a little more comfortable in terms of proceeding ahead and completing your tax return. The one additional comment that I wanted to make with regards to the service provided by the Graduate Student Association is that this is a service in support of you completing your tax return. This is not a tax preparation service. And so if after you've watched the video, looked at the resources provided, you still have some reservations about taking on the preparation of your own tax return, you can seek out tax preparation services to prepare your return for you. One of the largest ones is called H&R Block. I'm not sure exactly what they would charge for the preparation of a student tax return, which would be relatively simple, but I'm going to suggest it's going to be fairly close to $100. So let's start, and I'm going to start by looking at the very first slide, which is entitled, "Are you eligible to file an income tax return?" So income tax and income tax returns in Canada are the outcome of legislation in place that allows both the federal government and the province of your residence to collect income tax and use it to support the services they provide to the citizens of this country. Now, there is not a requirement to submit two separate tax returns. One return will cover off the reporting responsibilities to both the Government of Canada and the Government of Ontario. When we talk about the Government of Canada, income tax falls under the auspices of a department called Canada Revenue Agency. And so as you look through some of the resources provided, you'll see that as part of the EARL, oftentimes the letters CRA appear as part of that EARL, and that is in reference to that particular department. You'll also see, and I'll make reference to it through the video, that some of the approaches with regards to what's taxable, what's deductible, will be exactly the same, whether we're talking about the federal or the provincial government. some of them are different. So where they're the same, one source of input on your part, one specific page in the actual tax return will represent both the federal and the provincial government. In other cases, where there are differences between what each level of government allows or requires, you will see that in your completed tax return, there will be 2 pages with reference to. The biggest example, or the most often seen example in a student tax return, is that there are differences between what is allowed federally and provincially with regards to tuition and tuition payment as a deduction in calculating your taxes. So back now to the specific content on this first slide. So you are eligible if you have settled in Canada. And when we talk about settling in Canada, it's more than just simply physically being here. There is something called residential ties, which is in the information that you will see. And those residential ties are determined by a number of factors. The implications of a residential tie means that if you are deemed as having residential ties in Canada, you then are obligated to file a Canadian income tax return if you have to report on income earned and or income earned and taxes owing, or if you don't have any income to report, there are still circumstances under which you should be filing a tax return in order to capture some deductions that will be available for use in future years to offset against future taxes, and also to make credits for specific government payments that are referred to as credits as amounts of money that you will receive based solely on the requirement for you to submit a tax return. So residential ties, you have residential ties in Canada if you even do something as simple as opening up a bank account here, or obtaining a Canadian bank credit card. If you own any personal property that you bought in Canada, for instance, the furnishings in the apartment that you're living in, those classify as things that give you residential ties and therefore lead to the requirement to potentially apply. One of the pieces of data that's very critical to the ability to file tax returns is what's called a social insurance number, a 9-digit number, and that number is most often applied for as part of the process of you coming or being in Canada and wanting to receive certain government or participate in certain government programs, again, some of them that we will talk about here, and be registered so that you can be employed and that your employer can collect certain monies related to what are called universal programs that apply to anybody working in Canada, and remit those programs and prepare documentation to the Canada Revenue Agency on your behalf. So the other resource that's very important for you in terms of managing your affairs with the Canada Revenue Agency is something called My Account. And My Account allows you to access and view personal income tax and benefit information, and also to manage your tax affairs on an online basis. There is a specific requirement in place in order to create My Account, as is identified here, and that is that you have to have, you have to go through a process, and that process is facilitated by you completing, first of all, your initial corporate income tax return in Canada, submitting that to the federal government, Canada Revenue Agency, and then once it is processed and you receive a piece of documentation from the government called the Notice of Assessment related to the tax return that you have filed, you can then, based on receiving that notice, go ahead and create my account and use it to do a number of things and access a number of things concerning, again, your income tax and benefit information. The final thing I'll make reference to is the last bullet on that slide. And that last bullet makes reference to a couple of resources that I am strongly encouraging you to read prior to taking on the task of preparing a tax return. I'm going to suggest that you read them in the following order. First, newcomers to Canada. Second, students and income tax. The first provides general summary level information about how income tax operates within Canada and applies to anybody in this country, regardless of whether they're coming here as a student, whether they're coming here to work, whether they're coming here as a spouse of someone who is working or a student, while the second really focuses its attention on those specific aspects of income tax that apply exclusively to students in this country. So after you've read those two documents, I'm going to suggest to you that some of the fears that you probably have right now with regards to what this income tax thing is all about, how do I, manage myself in the context of filing, and what do I do after I get a notice of assessment, and how do I receive certain credits, will become a little clearer to you and hopefully ease some of the stress maybe you're experiencing right now. So let's move our attention next to the second page. Do I need to file an income tax return in Canada? And as mentioned at the top of this particular slide, you have to pay tax on any income that you have earned. And that income, typically, it would be in the form of employment income. And for you as a student, you probably are employed either by the University of Waterloo or employed by some business entity off campus in a part-time basis to help supplement your cost of living while you're here earning your master's or PhD. The only way that you can claim a refund, if in fact you qualify for a refund, is through the process of filing a tax return. And this refund would be in the form of a repayment of certain monies that your employer has deducted from your salary. These are payments that they have deducted by law, and they are not really tied specifically to your unique set of circumstances with regards to how much you owe. And I'll talk about the three types of deductions that employers make in a couple of minutes. And so oftentimes what will happen is that the employer will take off some amounts. Those amounts will be determined by you completing a form when you first, or prior to you initially starting to work, called a TD1. And the employer will take those amounts determined based on the information in your TD1 off of each of your pays, remitted to the government on your behalf, and you will report it as a deduction, as an amount you can reduce your taxable income by when you file your tax return. Sometimes it may happen that the amount of deductions your employer has withheld is more than they should have withheld. And so you need to file a tax return to quantify what that over deduction was and to ask the government to give you that money back. In addition, through the process of filing your tax return, you can apply for some credits. One of the credits that you can apply for is called an HST rebate. And that is a rebate that's determined not based on how much money you expend and pay in the way of HST on purchases you make in Canada, but on the level of income you report. And that credit is designed to help provide additional support to those relatively low earning Canadians. And typically that would be the scenario that a student would fit under. Now, in order to determine whether you qualify for the credit and how much that credit will be, you need to go through the process of applying for or of calculating and remitting a tax return. Excuse me, the tax return is then processed and the amount of tax you qualify for is determined, and then the government will remit that to you over the course of the next 12 months. Now, in addition, the government of Ontario has some credits also that you potentially can qualify for. And again, with those credits, it's based on information that you submit at the time that you do your tax return. And those amounts either typically relate to the rent you pay and also relate to another element of the HST. It's a remittance on the provincial government's portion of the HST. And going back to the HST rebate, the one additional comment I wanted to make to you is that other than having to file a tax return in order to determine whether you qualify, you can also, if you wish, you can speed up the process to being recognized as being eligible for an HST credit by submitting a one-off application form that you can do as soon as you've been in Canada for 1 month. Another reason why you will opt to file an income tax return is that there are certain what are called non-refundable tax credits that you can apply for. They are, by the literal term that's used to describe them, they do not represent monies that the government will send you. They represent amounts that you can use to offset taxable income. Some of these non-refundable tax credits are only available for use in the year that you can qualify for them or have earned them. Others are available for carry forward if you cannot use them in the given year that you have earned them. For you as students, one of the biggest sources of a non-refundable income tax credit that you can carry forward relates to tuition. And the only way that those credits can be carried forward is you have to go through the process of filing a tax return. Even if you have no income to report, you have no tax owing, you still need to file a tax return indicating the tuition that you paid, therefore the amount of credit you qualify for, so that it can be captured within the Canada Revenue Agency system, and they then are aware of it in the future, and you are aware of having it in the future to apply against taxable income in years to come. The last two bullets on the slide make reference to a couple of other programs that probably are of less interest to you at this particular juncture. One of them is a registered retirement savings plan program that simply defers the income taxes that are owed on taxable income by you setting up a registered retirement savings plan and making contributions to that plan in a given year, and something that's referred to as the Canada Child Benefit. And that's an amount of money that's paid to those of you who are here with your children and are having to support them while they're here with you. And this is a non-taxable amount of money that you will receive from the government to use to help pay for those needs for your children. Again, before you can potentially collect this, you have to go through the process of filing a tax return. The next page is entitled, what types of income are taxable in Canada? The most common type of income that's taxable is employment income. So employment income, again, typically for most of you will be either through working as a TA or RA for the university or through part-time off-campus employment in a business. The other type of income that is taxable is interest that's earned on any monies that you have sitting in an interest-bearing bank account. So if you ended up coming to Canada with a sum of money to have available to support you while you were studying here, that sum of money is not taxable. What is taxable related to that money is the interest you earn on that money while it's sitting in the bank. And again, you need to reflect that income, which is reported to you as part of a T3 from the bank in your income tax return. RESPs, or Registered Education Savings Plans, they're another program that the government has in place to help encourage individuals to save for the cost of their post-secondary education. That program allows, again, for any taxes owing on the interest earned on funds set aside in this plan to not be taxable until such time as the funds are withdrawn and used to pay for your tuition and other education costs. If any of you happen to become involved in receiving research grants for your work as you're pursuing your academic credentials, that research grant needs to be reported as income. You can offset that grant amount by any expenses you incur. Those would be expenses for things like travel and attendance and registration at conferences you go to present papers at, to lab equipment that you purchase for the use in your labs, to any staff that you end up hiring to work in your labs. And the one final type of income that may apply to a number of you that is not employment income that's paid to you by your employer are the tips and gratuities that you may receive if you are in a service industry, in the restaurant or bar service industry. Those tips and gratuities are also taxable income, and the only way that you will be able to report them is if you are maintaining some sort of a log where you are making note of the tips that you have earned on each of your shifts, and at the end of the year you're going to add them up and report them as another taxable income item. And finally, and notice the very last bullet has got in caps, N-O-T, boing, not. You will see that when you're retrieving your taxable slips from the University of Waterloo, if you are in receipt of a scholarship or bursary, you will get a T-slip, a T4 GSA. The monies you receive from a scholarship or bursary are not taxable. That means even though you've got that slip, you do not have to report the amount of the bursary or scholarship. You do not have to figure out the taxes on it. You simply ignore it. So that takes us on to the next page. What deductions can I claim? And as I mentioned earlier, there are deductions that your employer, if you are working for somebody, will automatically withhold from your paycheck. And those three types of deductions are income tax, Canada Pension Plan, and employment insurance. All required by law, all determined based on the amount of income you make in a given pay period, and also by the information you disclosed in the TD1 that I mentioned earlier. And your employer withholds them. They're subtracted from your paycheck, as you can see when you look at your pay stub. They are in turn sent by your employer to the government. Then at the year end, when your employer prepares your T4 slip, they will reflect the totals that they have withheld and sent to the government. You will get a copy of that T4 slip, and oh, by the way, the government also gets a copy. So one of the things that they're going to be checking when you submit your tax return is they're going to be looking for the fact that you are reflecting in your income tax return all of the information that they have gotten from your employer in terms of the various T-slips the employer has sent to them. Now, oftentimes I get asked, especially by students when they're first coming to Waterloo to study, certainly I can claim the moving expenses for coming here to Waterloo. You know, my airfare being the biggest and any other costs I incur to move my possessions, my clothing here to Waterloo. Can I not claim them when I'm filing my first tax return? And unfortunately, typically the answer is no. The rules with regards to moving expenses when you are coming to Waterloo to go to school are that you can only claim those expenses against bursaries and scholarships that you're reflecting as income. Well, big lot of good that does you, doesn't it? Because as I mentioned earlier, you don't claim those. And if you can't claim them, you can't claim the moving costs. Sorry. However, in certain instances, you can claim moving costs. Once you're here and you're involved in your studies, if in a given term you happen to move somewhere to go and work, you can claim the costs of moving to your place of employment. However, like when you incurred costs to move to Waterloo at the start of your studies, when you move back from that place of employment to Waterloo to continue your studies, once more, you cannot claim the moving costs to come back to Waterloo. And the other expense that you can claim is child care expenses. So this would typically be daycare costs that you pay while you're busy at school, involved with your studies. The person who is able to claim these child care expenses is the spouse with the lower net income. And again, that could include a spouse who's not working at all, so they have zero net income, but they still need to file in the context of receiving the child care expense amount of, or pardon me, to be able to apply the child care expenses against income. So that takes us from this page to the next page called non-refundable tax credits. Now, you'll note that the second bullet makes reference to a threshold level of income in a year that you need to exceed before you are liable for income taxes. Of note, for those of you that have moved to Canada during the year, that basic personal deduction of just over $12,000 is prorated based on the number of months during 2019 you were actually in Canada. So if you came here last fall, started your studies in September, your basic personal exemption for 2019 would only be just over $4,000. You can claim, again, the income tax, Canada Pension Plan, and employment insurance that your employers have withheld and remitted. You also can claim your unused, and you see the descriptor there says tuition, education, and textbook amounts. So that's a bundle of 3 different types of non-refundable tax credits, all associated with your schooling. Now, starting back in 2017, the ability to claim and the type of claims you could make with regards to these have changed. Prior to 2017, both the federal and the provincial governments allowed you to claim all 3. Through a series of changes that have been phased in over the past couple of years, for 2019, the only one of those 3 that is still available to claim is the tuition credit. And the tuition credit is now only claimable in the context of your federal taxes. Again, as I mentioned earlier, the very good thing about this particular credit is that you can carry it forward. So there may be some of you who started your studies prior to 2017 and still, because you have not had a large enough amount of taxable income to use the credits, still have them available. And if we think about the level of tuition you're paying on a term-by-term basis, you can, I think, appreciate how over the course of 2, 3, 4 years, that credit could approximate closely to $100,000. And that certainly is a welcome pool of credits to use to offset your big incomes when you finish your schooling, and if you happen to be staying in Canada for some period of time, either on a permanent basis or even to do some work on a short-time basis before you move back to your home country. You may be surprised that in the documentation you get from the university, the T-slips, you'll see some reference to a small $20, $40 amount labeled as a donation. These donations are not explicitly indicated along with the tuition that you pay for your program in your department, but they are in fact a small amount of the overall money that you have paid. And they are separated and identified explicitly in support of your income tax return because you can claim these donations. Medical expenses that you can claim are not only out-of-pocket expenses that you incur when you, for instance, have a prescription filled out at a drugstore, and part of the cost has to be you have to pay for yourself, but it also includes the premiums that you pay for UHIP. And you can confirm what the premiums are that you've paid by going to your account within the University of Waterloo, and that will tell you the premiums you paid for each of the terms that you were in school in 2019, and you can include those premiums as also part of your medical expenses. And finally, if you happen to have needed to borrow some money, and that borrowing has either been part of the Canada Student Loan Act or part of the Canada Student Financial Assistance Act, you can claim any interest that you have incurred in the course of 2019 as a deduction in calculating your taxable income. So we're on to the next page, and we're getting close to the end. This page deals with those of you who have children with you here in Canada. And this particular page relates to something that's talked about or is called the Canada Child Benefit. As you see, there's a age restriction that applies. There's a requirement that both you and your spouse, common law partner, need to file tax returns, even if you or your common law partner has no income, didn't work at all in 2019, you still need to fill out a nil in terms of taxable income return and submit it. This is a credit, an amount that you will receive monthly to offset the cost of caring for your child or children here in Canada. But again, in order to qualify, you need to go through the process of including an application for this as part of your income tax return. The one final comment I want to make about this particular credit is that the amount of the credit is reduced by your level of income inversely. So the higher your level of income, the less the Canada Child Benefit that you will receive. The last page has to do with the actual preparation of your tax return. Now, when submitting a tax return, there's the actual return document that needs to be submitted, in addition to any T-slips related to amounts that are reflected in your tax return. There are two ways that you can submit your tax return, either a paper-based or an electronic means. Certainly, I think your preference would be that you would like to be able to submit your tax returns electronically. There is, however, one condition that needs to be met before you can submit returns electronically, and that is the Canada Revenue Agency needs to have your date of birth in their records. If you're unsure that they have that in their records, you can call them at the CRA main number 1-800-959-8281. Tell them what you're interested in finding out regarding the date of birth being on record. And once you have confirmed if it is or is not, that's the basis for deciding whether you need to file a paper return versus submitting your return electronically. In most cases, a first-time filer will have to submit a paper return because CRA does not know your date of birth until you have submitted and they have processed that first return. Regardless of whether you're going to submit a paper or an electronic version of your return, I strongly, and that word is underlined and bolded, encourage you to make use of tax preparation software. The contents of a tax return are significant. In your case, which in the context of taxpayers in Canada is a very straightforward and simple set of income and deductions, your corporate tax return will end up being anywhere from 10 pages to 15, 20 pages. How would you like to be filling out 15 or 20 pages longhand? How would you like to be wrestling with what forms do I need to include in my income tax return? All of that is managed for you very efficiently by tax preparation software. There's a lot of programs that are out there. In order to use one of those programs, it has to be a CRA approved piece of software, and you can determine the list of CRA approved software by accessing their site and navigating to that information. If you were to ask me, what would you recommend in terms of a piece of software? There's two that I would suggest. One is TurboTax, and that's the software that I use. And it's basically because I became informed about it many years ago. I'm comfortable with it. I use it every year, and so I continue to use it. But the other one that I would actually recommend to you is called ufile.ca. So the URL is ufile.ca. Both of these programs are available as a downloadable program that you would have to install in your computer and continually update, or is a web-based version, which means no downloading issues, no issues of losing the program if your computer crashes and you don't have your files backed up. No issue in terms of updating because it will be updated automatically. What you're sacrificing is that the tax information that you will be determined based on the completion of the return will be stored somewhere in an external server, and it's your level of comfort in terms of having that information stored in an external server that you have to wrestle with in order to make the decision whether you want to use a web-based version to file your tax return. So the nature of how these programs work is as follows. You will create an account. Typically it would be your personal information, your social insurance number, your date of birth, your principal residence, and your marital status, number of dependents. And once you've created that account and built your profile, it will then, for any given year that you're working on a tax return, it will ask you to identify the types of income and the types of deductions that you have, and they'll do that through a series of screens and boxes that you simply tick off. Once you have provided the information in terms of those types of incomes and deductions, it will then take you through a series of screens that will mimic the types of boxes that appear in the information slips that you have already. And you'll see that every box on an information slip has a number, and the number in terms of the equivalent box in the tax preparation software in that given screen has exactly the same number. So it is really very straightforward in terms of copying information in the T-slips into your particular tax year's return. Now, one of the reasons why I tend to support U-File for students is it is the most liberal tax program relative to cost for use. U-File will allow any student to use its software for free, regardless of the level of income they are reporting. Good deal. Now, you have to navigate within the software to get to a particular screen that will have a numeric code that you will use in order to qualify for free. And to get to that particular code, there's a couple of windows you've got to open, and I'll just read through the process. So once you've logged into the home page of U-File, you'll see a menu bar at the top. One of the links is to the help screen. You click on the help screen. You'll see then one of the options is something called FAQ. You will scroll down to an FAQ that is entitled U-File Online Before You Start. Click on that link. You'll then see some more options. You navigate to one that is called Can I File My Tax Return for Free? You click on that link, and now you finally got to the screen that will provide you with the information you need for using the software for free. When your tax return is finished, you've entered in all the information, you've checked to make sure that you recorded, as far as you know, everything correctly, the right boxes, you then will be given an opportunity to save your return. Creates a file, you save it, then you have an option of either printing or not printing. You would choose to print a return if you wanted to have a hard copy available for your records. You would choose to print a return if in fact you are going to have to mail it in terms of the criteria that I mentioned before. And if you are mailing in a return, you take the tax return that you printed out, you take one copy of each of the T-slips that you've got, and you include that in an envelope, and the address that you mail it to is in the Newcomers to Canada document that I referred to way back at the beginning of this. And specifically, it's on page 30. It's an address in Winnipeg. If you are in the position where you haven't filed, you've been in Canada for a few years, and for whatever set of circumstances, you've never bothered to file a return until now, you do have the ability to catch up and file returns covering the years that you've been in Canada up to and including 2019. Tax returns coincide with calendar years. The tax preparation software will allow you to go back and prepare, or will allow you to prepare returns for multiple years. The only thing that you need to remember is that you should prepare multiple year tax returns in chronological order, starting with the oldest, working up to the most recent. If you are in the situation of filing for the first time, having to submit a paper return, and you're also submitting multiple years returns, I would print all of them out, attach all the appropriate T-slips, put them in one envelope and mail them to the Winnipeg address. Now, once you have submitted that initial return, once Canada Revenue Agency has your date of birth on file, you now have the ability in future filings to submit your tax returns electronically. And that process is part of something that is referred to as NetFile. NetFile operates within your tax preparation software, and you will see that you have the ability, once you have a completed tax return, that you can submit your tax return electronically. In order to do that, it's a very simple, straightforward process. Literally takes you seconds to tick off a couple of boxes, submit it, receive confirmation that your return has been received. So, hard copy, electronic filing, the government receives it, they process it, they check it. They then will send you this notice of assessment, an acknowledgement that they've checked your return. They have potentially agreed with all the numbers in your return, or they've identified some numbers that they believe are wrong, and they will tell you what they believe are the correct numbers. All of this is reflected in a notice of assessment. The time period between the submission of your return and the receipt of the notice of assessment will be between 2 weeks and 10 weeks. The time frame typically dependent upon whether you filed electronically, the shorter time period, 2 weeks, versus filing a paper-based return nearer to 10 weeks. The norm is that both your tax return needs to be filed by April 30th of the following year. But wait a minute, because of COVID-19, for the filing of your 2019 return only, hopefully, not beyond this year, the deadline for filing your return has been extended to June 1st. In addition, if you happen to owe any tax monies as calculated within your return, the norm is that those monies need to be received by the government prior to April 30th. Again, one-time extension this year. Those monies do not need to be received by the government until August 31st. Payments that you make, typically you'll make by an electronic transfer to the Canada Revenue Agency through your bank account and online banking. Well, I think we've got her licked. So, you made it through. What happens now? Well, you're comfortable. You feel you're okay. You're looking forward to the excitement of preparing your own tax return, then go for it. Good luck. Get her done. Get her mailed. Now, one other thing to consider in terms of when you're going to complete your return and when you're going to mail it is, certainly, if you owe, delay. I didn't mention, but if you fail to meet those deadlines, those extended deadlines, the government will start charging you penalty and interest. Now, on the flip side, if you have money coming back to you, would you rather have that money now? Or would you rather wait until you got near deadline time before you file your return, before it gets assessed, before the government arranges to give you those funds? You make the call. Probably you'd rather have the money sooner, but you need to file your return sooner in order to get that money. And oh, by the way, the government doesn't like paying you by check. They will want to pay you by an electronic transfer of funds to a bank account that you set up. You communicate that information to them. If, after digesting all of this, reading the documents, taking a look at the software, in the process of preparing your return, you have more questions, you're certainly free to book a one-off appointment with me. These appointments will occur in 3-hour time slots spread over basically this week through to the end of May. You go through the process of going to the GSA website, navigating to the tax aid clinics, making a request for an appointment, and you will be set up for a given day at a given time. The appointments are 15 minutes in duration. We will manage the appointments through a phone call. I will call you, we'll have a discussion, we'll hopefully be able to answer your questions. And again, a reference to what I mentioned at the very front end, if even after we have done all of this, even if we've answered your questions, if you're still uneasy and you want to get someone to do your actual return for you, again, there are tax preparation services available. But again, that's not something that the GSA is supporting. So good luck with the completing return. Good luck with your studies. And hopefully we get all back to a level of normalcy within the next few months. Bye for now.